Welcome to the deep dive. We're jumping straight in today.
Yeah, lots happening.
Absolutely. We're going to explore some really interesting crypto developments, uh, specifically looking at how Bitcoin ETFs are, well, doing compared to gold ETFs.
A big shift there.
Definitely. And we'll also get into the legal drama surrounding Celsius's former CEO, Alex Mashinsky.
Right, that's been developing.
Plus this whole new thing called PolitiFi, these meme coins popping up.
Oh yeah, that's something else.
And finally, some important stablecoin news, specifically out of the UAE.
So for this deep dive, we're mainly drawing from a Blockchain DXB recording dated April 30th, 2025.
And our goal here, as always, is to sort of cut through the noise.
Exactly. Give you the key takeaways, help you understand what matters without getting totally overwhelmed.
Okay, let's kick off with those Bitcoin ETFs then. Decrypt reported, what was it? Over $3 billion in inflows.
Yeah, just in the last 5 trading days alone, massive numbers.
But the contrast is stark, isn't it?
Yeah.
Gold ETFs actually saw outflows.
$1 billion out. That's the really interesting part.
So you've got this $4 billion gap opening up.
Which, according to the source, is the biggest gap we've seen since the U.S. presidential election back in November 24.
Wow. That really makes you think, doesn't it? What's driving that?
Well, Standard Chartered had some analysis suggesting it might reflect maybe less appetite for U.S. assets generally.
Interesting. They mentioned things like rising treasury yields.
And less foreign money going into long-term treasuries. It could be part of a bigger picture, a sort of broader economic shift, potentially.
Yeah, maybe. Now, from my point of view, looking at these ETFs, while the momentum is huge, I still feel like the main winners are the issuers, the firms launching these products.
That's a fair point. It raises that question of who really benefits most here.
Right.
And the source material, it touches on this. It brings up how some of the Bitcoin OGs, the real early believers and maximalists.
They weren't exactly thrilled about ETFs, were they?
Not really. For many of them, it's all about self-custody, holding your own keys.
The core principle.
Exactly. And decentralization. ETFs, well, they kind of move away from that inherently. You're trusting a third party again.
Yeah, definitely a different philosophy. Okay, let's pivot now. A less positive story, I guess. Alex Mashinsky.
Ah, the former CEO of Celsius Network?
The DOJ is seeking a 20-year prison sentence. That's significant.
It really is. And the allegations are extremely serious, leading a fraudulent scheme, customer losses around, what, nearly $7 billion?
$7 billion. It's staggering. The recording mentioned he pleaded guilty back in December.
He did, to misleading customers about the safety of their funds and also manipulating the CEL token, their own crypto, for personal profit.
And the prosecutors are saying this wasn't just, like, bad management.
No, they're emphasizing it was deliberate, deceptive, not accidental mistakes.
And you look back at Celsius in its heyday, 2021, they were huge. Over $20 billion in assets under management.
Incredible scale. But then, according to the source, came the risky moves.
Like uncollateralized loans, that's always a red flag.
Big time.
Yeah.
And allegations of misusing customer funds, all while, publicly talking about how safe everything was.
It just sounds pretty bad. The contrast between the public face and the alleged reality.
And the detail about Mashinsky personally profiting $48 million from selling CEL tokens.
Wow.
That really adds weight to the prosecution's argument about self-interest being a key motivator.
And it all ended with the bankruptcy filing in July 2022.
Leaving a massive hole and a lot of angry customers. It's a real wake-up call about risk in this space, especially with platforms that aren't transparent or well-managed.
So sentencing is set for May 8th. If you really want to make an example here, send a message.
To deter future fraud in crypto, yeah. Seems likely.
The source also mentioned something kind of ironic. Mashinsky apparently used to criticize millionaires.
Yeah, back in like 2018, 2019, while apparently having a pretty substantial net worth himself even then.
Huh. Adds another layer, doesn't it?
It definitely adds a layer of irony, as the source pointed out. Just underscores the need to look at actions, not just words, especially with money involved.
Okay, right. Let's shift gears again to something maybe a bit stranger. This PolitiFi trend.
Ah, yes. PolitiFi. It's definitely gaining traction.
Driven largely by meme coins linked to President Trump, it seems.
That's what the recording indicates. Apparently, the official Trump and MELANIA tokens dominate that market now.
How big is it? The PolitiFi market.
Around $3.3 billion total value, and those two tokens command something like 95% of it.
95%. That's incredible dominance.
It is, and it seems to have just crushed the older political meme coins that were around before.
So the Trump meme coin launched January 2025, Market cap around $3 billion.
Roughly, yeah. And the MELANIA token is sitting around $184 million. Still significant, but much smaller.
And those older ones like MAGA, BODEN, MP Trump, Kamala.
Yeah.
What happened there?
Basically collapsed. The source says they're down over 90%. And maybe more importantly, the liquidity has just evaporated. You can't really sell them easily, even at those low prices.
It just shows how incredibly speculative these things are.
Totally. Especially when tied to politics, which is already unpredictable. It's all about narrative, sentiment, maybe tribalism too.
There was also that weird detail about unofficial Trump tokens being sent to his wallet.
Yeah, the issuer apparently transferred a bunch. They were worth like $10 million at one point.
And now?
Plummeted down to about $118,000.
Huh. Makes you wonder about the motive behind that transfer.
It certainly does. It kind of highlights the potential for manipulation and just the general lack of clear rules in this sort of Wild West corner of crypto.
Yeah. It's very narrative-driven, as the source says. Sentiment can change on a dime.
Absolutely. And you can probably expect more political tokens to pop up around future elections. It feels like a pattern now.
But the bottom line, really, is being aware of the risk.
Huge risks.
Yeah.
Definitely something to be careful with if you're thinking of getting involved.
Okay, so moving away from the meme coins, let's talk stable coins. Some potentially really significant stuff happening in the UAE.
Yeah, two key developments. Circle in Abu Dhabi, and then a broader UAE Dirham stablecoin project.
Let's start with Circle. They issue USDC, right? Big player.
Exactly. They've secured, in principle, regulatory approval. That's the key phrase.
From the Abu Dhabi Global Market Financial Services Regulatory Authority. Okay, what does in principle actually mean here?
Think of it as a major first hurdle cleared. It allows them to operate as a money service provider within ADGM, but it's sort of a stepping stone towards getting the full financial service permission, like a provisional license.
Yeah, and they already set up shop there last year.
Incorporated in ADGM in December, yeah. Shows they're serious about the region, Middle East, and Africa expansion.
And their goal is what? Building a compliant on-chain economy?
That's the stated aim. Their CEO, Jeremy Allaire, was quite complimentary about the UAE's approach to financial innovation, calling it responsible.
Seems like Abu Dhabi is really trying to position itself as a hub.
Definitely. ADGM wants to be a center for digital finance innovation. Circle joining fits right into that.
And they'll be part of Hub 71 too. That's the tech ecosystem.
Right, which should help boost digital asset innovation there. Mentorship, workshops, hackathons, that sort of thing.
And Circle, of course, issues USDC and URC. They want the biggest stablecoin network globally.
That's their ambition, yeah.
Okay, now, the other piece, a UAE Dirham stablecoin. This sounds like a national initiative.
It does. It's an initiative by IC80Q and FAB, First Abu Dhabi Bank.
Okay, FAB is huge, right? Biggest bank in the UAE.
It is. And they're planning to issue this Dirham-pegged stablecoin. The recording called it Rambach. But critically, it's aiming for regulation by the Central Bank of the UAE. That's pending approval, of course.
So a fully regulated bank-issued stablecoin pegged to the local currency. What's the goal?
Making payments easier, boosting business locally and globally, and just generally strengthening the UAE's digital financial infrastructure.
So it'd be like a trusted digital dirham.
Pretty much. For consumers, for businesses. And they're designing it with future use cases in mind, too.
Like what?
Things like machine-to-machine payments, AI applications. It's quite forward-looking.
And it'll run on which blockchain?
The ADI blockchain, developed by the UAE-based AD Foundation. It's described as compliant, scalable, secure.
ADI Foundation.
Yeah.
They connect TradFi and blockchain.
Yeah, and they host something called the Digis Partnership, involves over 20 governments. So they seem all connected.
The whole thing sounds focused on efficiency, security, scalability. Fits the UAE's vision.
Absolutely. Becoming a top-tier innovation and finance hub. And ADQ, the sovereign investment entity behind it, has serious clout, over $225 billion in assets. They're a key player in national development.
One thing the source brought up, though, is the ADI blockchain permissioned or open source?
That's a good question. It wasn't entirely clear.
Because that makes a difference, right? Who
Yeah.
can participate?
A big difference in terms of access and transparency versus control. But either way, these stablecoin moves in the UAE are definitely strategic and suggest they're embracing digital assets seriously.
Okay, so that's quite a tour. We've covered a lot today.
We have, from institutional shifts with Bitcoin ETFs outpacing gold,
to the messy, cautionary tale of Celsius and Mashinsky.
the weird world of PolitiFi and meme coins.
And these potentially transformative stablecoin developments in the UAE. It's a real snapshot of the current crypto landscape.
And that contrast between Bitcoin and gold ETFs, it really does make you think about how perceptions of value and safety are evolving, doesn't it?
It does. Maybe something we can dig into more later, depending on what you, the listener, are interested in.
The Celsius story, too. It's just such a stark reminder, isn't it? Due diligence, transparency, they're not optional in this space.
Absolutely. Even with big names involved, what lessons do you take away from that that's worth considering?
And PolitiFi, wow. It shows the power of narrative and community, for sure.
But also the huge risks of pure speculation. What are your thoughts on mixing politics and crypto like this? It feels potent.
Definitely potent. And finally, Abu Dhabi's moves on stablecoins, the potential dirham stablecoin. It really points to a maturing market in the Middle East.
How do you think that might shape the region's financial future? It's a big question.
It is. So we really hope you'll reflect on all this. How does it shape your view of the digital economy? What questions did this deep dive raise for you? Feel free to dig deeper yourself.
Yeah, definitely. And maybe a final thought to leave you with. As we see this increasing overlap between traditional finance and digital assets, what do you predict might be the next major point of convergence, the next thing that could really shake up the global financial system? Something to ponder.